Hello, this is Leroy Meadows, and I want to welcome you to this session. In this session, we're doing an exercise here, and this is going to be at the end of your chapter, exercise 13-19. Again, this is exercise 13-19 at the end of the chapter. So let's go ahead and get started. Snappy Tiles is a small distributor of marble tiles. Snappy identifies its three major activities and cost pools as ordering, receiving and storage, and shipping, and it reports the following details for 2016. And we have the different details here. We have the activity of placing and paying for orders of marble tiles. The cost driver, or the allocation base, is the number of orders. The quantity of the cost driver we're going to incur in the next year, 500, and then the cost per unit of the cost driver, $50 per order. Then we have receiving and storage. The cost driver, or the allocation base, is loads moved. We expect to do 4,000 of those, and at $30 per load. Shipping of marble tiles to retailers. The cost driver is the number of shipments. We expect to do 1,500 of that activity, and each shipping is going to be $40 per shipment. Now for 2016, Snappy buys 250,000 marble tiles at an average cost of $3 per tile and sells them to retailers at an average price of $4 per tile. Assume Snappy has no fixed cost and no inventories. So we're assuming here that besides the no fixed costs, they have no finished goods inventory, work in process, or anything like that. So the first thing is we're asked to calculate Snappy's operating income for 2016. So when we're making decisions, we're looking at, we initially want to get down to the cost per unit so that we can make pricing and product mix decisions. But we also need the total cost. Seeing as this is activity-based costing, the cost per load, and let's say for receiving and storage, the number of loads moved, 4,000. But we plan on buying 250,000 marble tiles. So we're going to have to do a little bit of calculations here and going for total cost first and then dividing it on a per unit cost here. So let's take a look at revenues. Well, we know that we're going to sell those to retailers at $4 per tile. So here I can do my $4 per tile, and let's go ahead and format this. And how much will it cost me to make or to sell? What will be my total revenues? Well, 4 million or 250,000 times $4 per unit will give me $1 million. Now, let's take a look at the purchase of cost tiles. Now we buy these tiles at what? $3 per tile, the problem tells us. So I'm paying $3 per tile. And if I buy 250,000 tiles, how much is the total amount of tiles going to cost me? It's going to cost me $750,000. So let's go ahead and format there. Now, what are our ordering costs? Now, we have the three different activities here, so we're going to account for these activities. So I want to get these to a per unit basis, but remember with activity-based costing, I need to get the total amount spent and then divide that by the number of, in this case, tiles I'm going to purchase, 250,000 tiles. So what am I going to do here? Well, I want to take the quantity of the cost driver, 500, for orders, for ordering costs. So 500, I'm going to multiply that by the cost per unit of the cost driver, or how much is it going to cost me per order. And so my total cost for ordering costs is going to be $25,000. So I'm going to plug that right in here. And let's go ahead and get this formatted here. So if I spend $25,000 on ordering costs, what is the cost per tile? I'm going to simply take my $25,000, spread that out over 250,000 tiles, and I'll get 10 cents per tile is what is going to be my ordering cost. Now let's take a look at the receiving and storage. My receiving and storage, I expect to move 4,000 loads, and each load is going to take $30 of cost in order to move the load. So I'm going to take my 4,000 loads, and each load will cost me $30 to move. So my total amount spent on moving loads, $120,000. Now, how much does that mean on a per tile basis? Well, on a per tile basis, I'm going to take my 120,000, divide that by 250,000 tiles. So I'm going to spread that cost out over 250,000 tiles, and I'm going to get 48 cents per tile. Now let's take a look at my shipping costs. My shipping costs are how much? Well, I expect to have 1,500 shipments. So 1,500 shipments, and each shipment is going to cost me $40 per shipment. So my total shipment costs are going to be $60,000. And again, we see that right here. 1,500 shipments, $40 per shipment. So my total shipping costs are going to be $60,000. And on a per unit basis, that will translate to 24 cents per tile. So in aggregate, what are my total costs? Well, my total costs are going to come out to be, when I add everything up together, $955,000. What is that on a per unit basis? Well, I'm going to add up my per unit basis here. And my total cost per tile, $3.82. So what does that leave as far as operating income on an aggregate basis and then on a per unit basis or a per tile basis? Now, I'm going to take my revenues minus my total costs. And so for selling 250,000 tiles, I'm going to profit $45,000. On a per unit basis, that translates into 18 cents. So that is Snappy's operating income for 2016. Now let's take a look at requirement 2. For 2017, retailers are demanding a 5% discount off the 2016 price. So whatever that price is, we're only going to be able to charge 95% of this because they want a 5% discount. Snappy suppliers are only willing to give a 4% discount. Snappy expects to sell the same quantity of marble tiles in 2017 as in 2016. If all other cost and cost driver information remains the same, calculate Snappy's operating income for 2017. So basically, we're told that revenue per tile is going to come down by 5%, and the cost to purchase the tiles is going to come down by 4%, but then all the activity costs are going to remain the same. So let's go ahead and figure out, what is my new sales price? Well, $4 per tile, and I'm only going to get 95% of that because I have to get a 5% discount. And that's going to be $3.80 per tile is what I'm going to be able to sell those tiles for. And let's get that here. So what are my total revenues? My total revenues are going to be $3.80 per tile times 250,000 tiles sold. That will translate into $950,000 of total revenue. Now, let's take a look here, and the cost of tiles is going to come down by how much? Well, the problem tells us it's going to come down by 4%. So I'm going to take my cost of tiles and multiply that by 0.96 because I'm going to get 96% of the cost. I only have to give a 4% discount. And so my cost of tiles is going to be $2.88 per tile. If I buy 250,000 tiles, then how much is my total amount going to be for cost of tiles? $720,000. And then we're told in the problem, all other costs and cost driver information will remain the same. So I'm just going to copy this information here. And so what is the new cost per tile? It is going to be $3.70. And what is the total cost of the tiles at these new prices? with the new selling price and with the new cost per tile, $925,000 in aggregate. So what is my total revenue going to be? My total operating income rather. My operating income is going to be really my total revenues minus my total costs. So now my operating income is only $25,000, and on a per unit basis, that's 10 cents per unit. So we see here that, and I guess the good point of the illustration is, if we have to lower our sales price, we have to, in order to maintain margin and operating income, we have to find cuts elsewhere. Sometimes those cuts will work and help us to maintain our operating income, or sometimes we'll fall short. And in the case of snappy tiles here, we fell short. Our profit per tile is now how much? What's the percentage of difference? 0.18 minus 0.10, 8 cents divided by 0.18. So our operating income has dropped 44, almost 45%. So we have a problem here. And now, since my operating income's dropped 45%, what am I going to do? I need to find some adjustments here. So let's take a look at requirement 3. Suppose further that Snappy decides to make the changes in its ordering and receiving and storage practices. By placing long-run orders with its key suppliers, Snappy expects to reduce the number of orders to 200 and the cost per order to $25 per order. By redesigning the layout of the warehouse and reconfiguring the crates in which the marble tiles are moved, Snappy expects to reduce the number of loads moved to 3,125 and the cost per load moved to $28. Will Snappy achieve its target operating income of 30 cents per tile in 2017? So basically, we're taking the changes in requirement 2 here. We're going to continue our 5% discount off the 2016 price, and we're going to accept, of course, we're going to accept our supplier's discount of 4%. So we're going to assume those same things in this scenario, but, oops, and that didn't work out quite so well, so let's just go ahead and so let's take a look and recompute our ordering costs, receiving and storage costs, and our shipping costs. So now we have, let's take a look at ordering costs. By placing long-run orders with its key suppliers, we expect to reduce the number of orders to 200. So now, instead of up here having 500 orders, we're only going to have 200 orders, and the cost is going to be $25 per order. So what's my total ordering cost now if I decide to make changes? Well, it's going to be what? 200 orders, and each order is going to cost me $25. So the ordering costs are going to be reduced down to 5,000. So we're on a good start here. And on a per unit basis here, what is that? 5,000 divided by 250,000. And that's going to be what? 2 cents per tile there. Now what about receiving and storage? Let's take a look at our recomputed receiving and storage numbers and find out now what does it cost per tile. Okay, by redesigning the layout of the warehouse and reconfiguring the crates in which marble tiles are moved, we can, okay, so receiving and storage, it's going to be what? Snappy expects to reduce the number of loads moved to 3,125 and the cost per load moved to $28. So per load. So let's take a look here. And 3,125 loads moved at a cost of $28 per load moved. My total receiving and storage costs are now $87,500. And on a per unit basis here, that is going to be what, 35 cents? Nope. Let's see. Yes, 35 cents per tile. So let's take a look at our shipping costs. We're not told anything with shipping costs here, so I guess I'm saying where shipping costs are not going to be able to change. We're not going to be able to change that. So my shipping cost from requirement 2, $60,000, and that's 24 cents per tile. So now, what are my total costs on a per unit basis? And on a per unit basis, it is going to be what, $3.49 per tile. And what is my total aggregate cost here? My total aggregate cost is going to be $872,500 per tile, or for 250,000 tiles. What is my total operating income on a per unit basis? Well, cost per or revenue per unit minus the cost per unit. And then I have operating income of 31 cents. And I can now, on the aggregate level here, bring that over, and my profit will be $77,500. So, and the question is, will Snappy achieve its target operating income of 30 cents per tile in 2017? Yes, Snappy will. And with these changes in the receiving and storage and ordering costs, Snappy has now got its cost structure down lower so that we can meet our target operating income per unit of 31 cents per tile, and then in aggregate also 77,500. So yes, Snappy did make the changes here. So, well, this is the end of this session here. This is Leroy Meadows. Thank you for joining.